how to use a mortgage calculator correctly. So I'm Jennifer Beeston. Today I'm going to cover with you how to use a mortgage calculator if you're in the state of California. Now, the reason this is just for California is because every state has different property taxes. So this one I'm going to be more specific to California on how a lender would look at your payment and how we would look at qualifying you if you're buying in California. So the first thing you want to do is you want to make sure you're using a decent mortgage calculator. There's so many you can get online. I actually will have a link to my mortgage app that you can download on your phone. It actually runs rates to the minute, like what rates really are in the market, and then you can play with the calculator. It's pretty darn cool. So I'll have a link to that. But you're gonna wanna make sure that you're not just looking at the principal and interest payment. So the biggest mistake I see people make is they call me and they're like, yeah, my payment's gonna be $1,800. And I'm like, no, it's not. They're like, what do you mean, my calculator? And I'm like, yeah, your calculator didn't take into consideration property taxes, homeowners insurance, HOA dues, mortgage insurance. There's so many different factors that go into your actual monthly payment. So if you're putting down 20%, the biggest thing you want to do is you want to calculate the taxes the way a lender is going to. 90% of lenders are going to qualify your taxes at 1.25%. So on your calculator, it will have somewhere you can put in the annual tax rate, and you're going to do 1.25%. That's going to give you the most accurate guesstimate of what your payment's going to be. Now, if you look at your county and you're like, well, Jennifer, it's 1.11%. Great. Yay, your taxes will be lower. Maybe if there's no bonds or special assessments, but you're not really necessarily going to know all that up front. So as a lender, we're going to be qualifying you off of 1.25. So you want to make sure you're looking at your payment like your lender's going to. Now, in terms of homeowners insurance, a lot of times those calculators will automatically fill something in. $30 homeowners insurance is not realistic unless you're buying a condo that has an HOA and the HOA is covering everything except for your interior, okay? For a regular single family home, insurance can be a lot more, and it depends on where it is. If you're in an area that's high fire, which in California we've had way too much of recently, your insurance could be $200 a month on a $200,000 home. It could. You know, it could be $14,000 a year on $1 million home. True story. So there's all these different factors. So what I always tell people is like, look, if you're looking at a house that's up to $500,000, like figure $100 a month to $150. If it's a high fire risk area, I always say just call a local agent if there's a local insurance agent, if there's a house you really like, and just get a quote so you're prepared. Because if you're playing with all these calculators and you're like, yeah, my payment's gonna be this, and you figured out $40 in homeowners insurance for $1 million house, you're gonna have a rude awakening, okay? If the house is between $500,000 and $1 million, when I'm estimating, I'm usually at about $150, unless the clients told me that they have artwork or once again, we're in a high fire area or flood. So you just wanna be realistic about where you're buying and what the potential insurance costs are, because that's a big chunk of your payment. The other thing is that if you're putting down less than 20%, you will have mortgage insurance. So if you're playing with calculators and it's just giving you principal and interest, you're making a big chunk of your payment. And the thing to know about mortgage insurance is that it's based on your credit score and your loan to value. So some of these calculators actually figure it correctly and some don't. So it's a little bit of a crapshoot. So you want to be really careful when you're doing that. And I always suggest, you know, if you're actually playing with mortgage calculators and you haven't been pre-qualified by a lender, I urge you to get pre-qualified by a lender. Call myself, someone from like me or my team will help you out. We do all of California. But you just don't want to get your heart set on a payment that may not be reality. And there's just more factors, so many more factors that go into your payment than your principal and interest. So I hope this has been helpful. Please feel free to check out the link to the app I give you. It's free. You just choose Jennifer Beeston as the person that you know at guaranteed rate. And it's pretty darn cool because it will give you interest rates like at the minute. So thanks for watching. If you have questions, as always, email me, call me. I'm always around. Thanks.